Okay, good afternoon, everyone. My name is Representative Jen Schultz, and I will be kicking off this first meeting of the Tax Expenditure Review Commission. I am going to be convening this meeting. I was designated by Speaker Melissa Hortman to convene the first meeting, and then later today we'll be electing a chair and vice chair. I thought we could quickly do introductions and then mention the staff that are on the committee for reference, so you know who to work with and ask questions of. So I'll begin. I'm again Rep. Jen Schultz. I'm fourth term House Representative representing District 7A, which is the east part of Duluth. And then we'll go through the House members. Representative Davids.
Thank you, Chair Schultz. Greg Davids, District 28B, Fillmore and Houston counties.
Representative Gomez.
Aisha Gomez, District 62B, South Minneapolis.
Representative Hertas, want to introduce yourself, please?
Thank you. Go on. I gotta fix something.
Okay, we'll come back to you. Senator Bach.
Well, thank you, Madam Chair. Tom Bach, represent a large piece of the Arrowhead region in northeastern Minnesota in the Senate. I'm a longtime member of the Senate Tax Committee, first in the House, then in the Senate, and glad to be here.
Let's see, do we have Senator Dietzig with us? Not seeing Senator Dietzig. Senator Rest.
Thank you, Representative Schultz and Rest. Currently District 45. I too have been on the tax committee, both in the House where I chaired it for 4 years and in the Senate since I was first elected to the Senate with a couple of brief vacations from it.
Senator Weber.
Thank you, Representative Schultz. Bill Weber from Senate District 22. I represent the very southwest corner of Minnesota, and my 10th year in the Senate, and this is my 2nd year in the Tax Committee, where I also serve as the Property Tax Subcommittee Chair.
Thank you, Senator Weber. Representative Hertas.
Thank you, Jerry Hertas, Representative 33A, 5th term member, and on the Tax Committee, Ways and Means.
Commissioner.
Thank you, Representative Schultz. My name is Robert Doty. I'm the commissioner at the Minnesota Department of Revenue, and I've been in this role for about 1.5 years now.
Thank you. And then we have 2 ex officio members, Representative Marquardt.
Thank you very much, Madam Chair. Representative Paul Marquardt, represent District 4B. Currently chair the House Tax Committee, and I just want to say a big thank you to all the members who have volunteered or appointed to be on this review commission, and also everyone who helped make this, turn this into law. And I have to say, Senator Bach, if you remember, I think it was 2010 or so, you created the bill that created a committee to look at tax expenditures, which one of the main recommendations was this review commission. And so we have it today. So just thank you, everyone, for helping make this happen, and thank you for serving on this committee.
Thank you, Representative Marquardt. And then Senator Carla Nelson is another ex officio. The ex officios are the chairs of the tax committees in the House and the Senate. Senator Dietzig, would you like to introduce yourself?
Hi, everybody. Thank you. Sorry I'm late. We were having technical difficulties on my end. My name is Carrie Dietzig, and I have the honor and privilege to represent the east portion of Minneapolis, so the neighborhoods around the U. So I'm on taxes and housing. So thank you for, I'm excited to be on this commission, and thank you for your patience.
And then we'll have the commission staff introduce themselves. Mr. Larson.
Schultz and members, my name is Christian Larson. I'm the interim director of the Legislative Budget Office. I've been in this role for a little over 1 year and with the Legislative Budget Office for about 3 years.
And then Ms. Schradel.
Hello, Commission members. My name is Christy Schradel, and I'm the Deputy Director of the Legislative Budget Office, just coming up on 2 months here at the LBO. Really excited to be here. I have a background working in the executive branch, so thank you and happy to be here.
Thank you, Christy. Jay Williams.
Thank you. And commission members, my name is Jay Williams. I'm the nonpartisan Senate Fiscal Analyst for the Taxes Committee.
Thank you, Jay. And then Sean Williams.
Thank you, Chair Schultz and members. My name is Sean Williams. I'm nonpartisan tax staff from the House Tax Committee.
Great. And then we have, in case we need them, we have Senate Counsel Nora Pollock.
Good afternoon, Representative Schultz and members. Nora Pollock, nonpartisan counsel to the Senate Tax Committee.
Christopher Kleeman.
Representative Schultz, I'm Christopher Clayman. I'm nonpartisan tax staff for the House.
Do we have Justin Cope with us? Not seeing Justin, nope. Okay, members, then we're going to quickly go over the enabling legislation. As Chair Marquardt indicated, this was legislation that has been worked on for many, many years and finally got it over the finish line last year. But we'll have Jay Williams and Sean Williams share their screen and go through quickly what our task is for the commission through the enabling legislation.
Chair Schultz and members, I'm going to speak first. I'm going to start by trying to share my screen with the presentation. Can everyone see that?
We can.
So to start with, we're going to briefly discuss what tax expenditures are. We're going to provide a little bit of historical context for the Review Commission and recent legislative activity around tax expenditures. And then we're going to discuss some of the key components of the enacting legislation and statute that governs the commission. So the membership, the components of review, and the process for public hearings and report submission. So the first question sort of facing the committee is just what is a tax expenditure? Speaking maybe imprecisely, a tax expenditure would be spending through the tax code. So indirectly changing the tax code to spend money. There's ways that that can be enacted, potentially through an exclusion, a deduction, or an exemption, a preferential rate for certain kinds of income or properties, credits, and changes in timing. So things like acceleration of deductions or depreciation, or deferrals of liability on tax. There's also a statutory definition of a tax expenditure. This is in Minnesota statutes, section 270C.11 subdivision 6. It's a provision which provides a gross income definition, deduction, exemption, credit, or other rate for certain persons, types of income, transactions, or property that results in reduced tax revenue, but excludes provisions used to mitigate tax pyramiding. So the components there are, a gross income definition, deduction, exemption, credit, or rate. So that's one prong of this definition. It has to provide a preference to certain persons, types of incomes, transactions, or property, and it must result in reduced tax revenue. The provisions related to tax pyramiding was something that was actually added in the enacting legislation for the commission last year. And that's just excluding from the definition of tax expenditure taxes on intermediate business-to-business transactions. The idea being that sales taxes are intended to be imposed on the end consumer only. Oops. So briefly, I just wanted to talk about the policy considerations for taxes that are maybe behind the commission. I think that it's not necessarily the case that tax expenditure is a good thing or a bad thing, but there are sort of unique features of tax expenditures that have led to legislative interest in this area of policy and that may underlie sort of the mission of the commission. So tax expenditures are unique in their durability. They're often not subject to the annual appropriations process and may continue in perpetuity without review or reauthorization by the legislature. There's visibility issues. So tax expenditures are not included in the state budget. They're not included in national rankings on spending and taxation. So they may be less visible or obvious to people sort of evaluating a state's public policy. There's issues of complexity. So tax expenditures add to the complexity of the state tax system that can make tax filing more difficult for taxpayers and also more difficult to administer the tax code for the Department of Revenue. There's issues of tax base erosion. So tax expenditures can shrink the tax base that would require higher tax rates to raise the same amount of revenue, or potentially prevent the state from lowering tax rates to raise a similar amount of revenue. There's also an ease of administration question about tax expenditures relative to direct expenditures. So there's sort of a policy choice about whether or not a direct expenditure might be a more efficient or effective way to administer a particular policy. And lastly, there's questions about effectiveness. So the idea being that you might be able to evaluate tax expenditures to determine if they provide a benefit at the margin, or if they reward taxpayers for doing something they already do, and potentially evaluate whether a direct expenditure might be a more efficient way to achieve a particular purpose. There's been a lot of legislative interest in tax expenditures dating back to 1983, when the legislature required the Department of Revenue to publish the tax expenditure budget as part of the governor's, as a supplement to the governor's budget in odd number, I believe it's in odd numbered years. I think the slides have this backwards. But in 1996, the expenditure budget was changed to be published in even numbered years. I was going to show also. In 2010 through 2011, as Representative Marquardt mentioned at the beginning of the commission hearing, there was a tax expenditure review report that was requested in legislation. The report was called Bringing Tax Expenditures into the Budget Process. It was a Department of Revenue report that was published together under contract with some academic economists, including the current state economist. And one of the recommendations was that all tax expenditures be formally evaluated and reviewed on an 8-year cycle. And in 2010, there was also a new requirement that any bills that create, renew, or continue a tax expenditure be required to include a statement of intent that clearly provides the purpose of the tax expenditure and a standard or goal against which the effectiveness may be measured. In 2013, the Nonpartisan House Research Office also published a review of selected tax expenditures. I mentioned that report in part because a lot of the content of that report is similar to the content of the Commission's duties, which Mr. Wilms will talk about next. So a description of the tax expenditures, their cost, the rationale or objective for those tax expenditures, comparison with direct spending programs, the incidence of the expenditures, and also academic evidence on the effectiveness of those expenditures. And finally, in 2021 last legislative session, the omnibus tax bill contained significant changes to tax expenditure laws. It first established the commission that we're meeting in today. It also required bills creating or renewing a tax expenditure to expire within 8 years of the provision taking in effect. And it also restructured the Department of Revenue's tax expenditure budget. It changed the dates for that budget, and it also required the budget to include any purpose statements that have been identified for tax expenditures, the incidence of so-called significant or tax expenditures, and the revenue neutral amount by which rates could be reduced if an expenditure was repealed. That's the end of my portion of the presentation. I'm going to hand it off to my colleague, Mr. Williams.
Thank you, Mr. Williams. So as noted earlier, Laws 2021 for Special Session Chapter 14 enacted the Tax Expenditure Commission and sent forth the scope in Minnesota Statute Sections 3.8855, including some other corresponding changes that were included or related changes. Subdivision 1 established the commission and stated the purpose. Subdivision 2 set forth some key definitions, and subdivision 3 is really what we're looking at here in this slide. And along with this, I'll also highlight subdivisions 6, 7, and 8, which are also related. Subdivisions 3 and 8 of the section outline the membership of the commission, the terms of the membership, and how to treat vacancies. So specifically, subdivision 3 outlines that the commission consists of 9 voting members. That's on the left side of the screen. These are 8 legislative members and 1 executive branch member. These are the voting members. 2 senators appointed by the majority leader, 2 senators by the minority leader, 2 members appointed by the House Speaker, 2 members appointed by the House Minority Leader, and then 1 member, which is the Commissioner of Revenue or the Commissioner of Revenue's designee. And then on the right, the ex officio members. If the chair of the House or Senate committee with primary jurisdiction of taxes is not an appointed member, in this case, Representative Marquardt and Senator Nelson, the chair is an ex officio non-voting member of the commission. Under the normal set of circumstances, each appointing authority must make appointments by January 31st of the regular legislative session in the odd numbered year. So this would be the start of the biennial budget process. And additionally, I should note there's no term limits. So, someone who's a member of the commission can continue to serve as long as they're reappointed. Subdivision 8, which as it relates to this, sets forth that the terms begin upon appointment and end at the beginning of the regular legislative session of the next even numbered year. So generally speaking, these are 2-year terms. However, there will potentially be a new slate of appointments in next January at the beginning of the budget cycle. A member may also cease to be a member of the commission when they cease to be a member of the legislative body or is removed or replaced by the appointing authority for any reason. And finally, as is happening later in the agenda, the commission shall elect a chair and a vice chair as presiding officers. Related to that, the chair and vice chair must not be from the same legislative chamber, and it must alternate between the House and Senate for 2-year terms. Finally, subdivisions 6 and 7, which are related here, detail the commission's staffing and technical support. So true to legislative staff fashion, they don't appear here, but they're part of it. And so subdivision 6 is the research division of the Department of Revenue must provide the commission with summary data required to complete the review components discussed on a later slide. In some cases, Department of Revenue folks have access to data that is strictly prohibited for others. And so they're providing some of the summary statistics that can be shared and not violate any state laws related to that. Subdivision 7 outlines that the Legislative Budget Office must provide professional and technical assistance as the commission deems necessary, including assistance with the report. So those are the two main agencies, one legislative and one executive branch that supports the commission in their activities. And then we can move on to the next slide here. So subdivision 4, so last slide was subdivision 3. This is subdivision 4 relating to the duties of the commission. And the commission's review duties are really segmented into 2 phases. The first part is the initial review, and that must be completed within 3 years of the establishment of the commission. And so those duties in the initial review are that the commission must identify the purpose of the state's tax expenditures if there isn't one listed in law. The second part is that they may also identify metrics for evaluating the effectiveness of a tax expenditure. So one thing I'll note here is there are yearly reports, but this does not all need to be done in the first year of the report. It can be segmented. And then the second part, which is the ongoing review, occurs every year after the initial review is completed. So in other words, when the ongoing review starts is determined by when that initial review finishes, be it in 1 year's time or using the full 3 years. And so the ongoing review really identifies a couple of the other components, and some might call the meat of the evaluation. And it sets forth that they must evaluate Minnesota's tax expenditures on a regular rotating basis. The commission must establish a review schedule that ensures each tax expenditure will be reviewed by the commission at least once every 10 years. And they have some flexibility in terms of reviewing expenditures affecting similar constituencies in the same year. But the commission must review a subset of the tax expenditures within each tax type each year. I think at last count, there was approximately 15 tax types covered in the tax expenditure budget. And finally, the commission may decide not to review a tax expenditure that is adopted by reference to federal law. I think, there are about 100 or so expenditures related to the individual income tax. Many of them key off federal law, more than half, and some are state specific, but were designed under federal law. So there's some flexibility in terms of how that is determined, which ones are reviewed and which ones are not reviewed based on, data reasons or other concerns. Okay, we can move to the next slide then. The components of review, and I'll discuss these generally and in some cases in detail, and also invite my colleague Mr. Williams to provide any additional context that might be helpful during this portion of the presentation. So the components of review, and this is subdivision 5 of the section, outline, 9 different components. And the first one has to do with the revenue loss as a result of the tax expenditure. So, very similar to the tax expenditure budget in terms of looking at what is the foregone revenue due to the special preference as compared to the baseline revenue system. The second is states that basically the purpose of the tax expenditure as required in 3.192, but also as potentially defined by the Tax Expenditure Commission through their work. Number 3 is related to the measurable impacts or the benefits that these tax expenditures provide. What is the benefit to society, to the state, to individuals, and also on the efficiency framework, what is the cost benefit? What are the resources necessary to generate the benefit? Is it, for instance, administratively complex for the agency, or because it demands the taxpayer to keep records or hire staff to administer the tax, things of that nature. And then number 4 looks at kind of the comparison to direct spending. One of the criticisms of tax expenditures is that they're not as transparent as the general budget process. And so this kind of compares a tax expenditure to a direct expenditure of the same nature. So for instance, the state's mortgage interest deduction, or the state's market value, homestead market value exclusion. How does that compare to direct spending on efforts to encourage affordable home ownership or home ownership in general? Another item would be, how does the Child and Dependent Care Credit compare to appropriations for early learning scholarships, or maybe some of the Child Care Assistance Program appropriations that are made? How does the sales tax exemption for residential heating fuels compare to the state's energy assistance program? Kind of looking at sort of the form of the tax expenditure against the form of an appropriation. Number 5 is related to any potential improvements to the tax expenditure to increase its efficiency on the administrative side or the effectiveness. Could the tax expenditure, for instance, be restructured to make it more targeted, or is the threshold too high to really, target the people affected? And I'll move on to the next slide here. Number 6. This component of review relates to when the tax expenditure eliminates a significant portion of the base. It's probably most relevant in those cases. So for instance, in the case of the sales tax, for example, this might be the exemption of selected services. If certain services were taxed, what could the rate then be lowered to based on that amount? Or, the exemption of food and clothing, for instance. It can be done for other tax expenditures, but might be most relevant for those. Number 7, this kind of keys into the Department of Revenue's biennial report on the tax incidence, and as we all know, that's, the difference between who remits the tax and then who actually pays it in terms of how that burden is shifted in different ways onto consumers and capital and labor. Number 8 shows the cumulative fiscal impacts. That's another component of the review. And this is what I would sometimes call the 10,000-foot view, or where the tax expenditure fits in amongst other state and federal tax benefits. And in conversations with my colleague, Mr. Williams, we have the understanding that it's somewhat relational in matter. Where does the expenditure fit within a certain patchwork potentially of other tax expenditures? Is it similar? Does it duplicate another benefit? Is it necessary in light of those other tax expenditures? Kind of how does it fit within the overarching goal in the tax code? And then last but not least, and this is probably the most important part, is providing the recommendation. Should the tax expenditure be continued? Should it be repealed, or should it be modified in some other way based on other components of the review that identify how it might be better served? And so I think the last thing I'll say about this is the Department of Revenue has key aspects that they're supporting the commission in terms of summary data for providing this analysis. And of course, LBO staff will also provide detailed analysis. So I think we can move on to the next slide. So basically, this covers the last section of the statute in terms of what's required. By December each year, public hearings on reviewed tax expenditures are required, including the presentation of review components. And then by December 15th each year, there should be submitted a written report to the legislative committees with jurisdiction over tax policy. And the report must detail the results of the commission's review of tax expenditures in the previous calendar year, including the review components outlined in statute. And the report may include additional information the commission deems relevant to the review of an expenditure. So for instance, any of the review components otherwise mentioned, the commission can decide to add on an additional layer to that. And that concludes our presentation. We're happy to stand for any questions there might be.
Okay, are there questions from members? I have a question, Mr. Williams. Can you just give examples of metrics for evaluating the effectiveness of a tax expenditure?
Yeah, so and I can ask Mr. Williams also to jump in. So for instance, in economic development, for instance, sometimes there's a way to measure the number of jobs created, or using some sort of input-output analysis, or different economic development measures to get at sort of the but-for effects. So just in terms of some of the maybe economic development credits or abatements. And this might relate more so to data that can be collected from these taxpayers, or can be collected because it's public data and is required through other reporting. That could be a measurable impact. It gets a little harder, I think, in some respects when the tax data is private, but there might be other ways around it in terms of the commission, commissioning a study to provide an economic analysis study of the impacts of, say, one tax expenditure on home ownership.
So it sounds like they're going to be very specific to the tax expenditure, the types of metrics we'll be using to evaluate it. Mr. Williams, did you have anything to add?
And Chair Schultz, I think maybe going a little bit broader than the examples that Mr. Williams gave, but one of the commission's requirements is for tax expenditures that don't have a purpose statement in law and don't have a standard of effectiveness in law, the commission's sort of initial job will be identifying how sort of the measures you're going to be used to evaluate those tax expenditures. And so that's part of the work of the commission too, is to identify what those measures would be, and then also to potentially determine if the expenditures meet those criteria, I guess.
Thank you, Mr. Williams. Representative Gomez.
Thank you, Chair Schultz. I guess I was wondering if, kind of piggybacking on what Mr. Williams just was talking about, sort of on the two phases of the work of the commission, because there isn't purpose statements or kind of metrics for effectiveness for a lot of the expenditures. Yeah, I just wondered if you could talk through this part, and is the ongoing review going to happen simultaneously with this initial review, or is it we're going to spend some chunk of time just kind of zeroing in on those first two bullet points under number one before we get to the kind of actual digging into the individual expenditures?
Mr. Williams? Or Mr. Williams?
Chair Schultz and Representative Gomez, I think that the way the statute is written, and I think as Mr. Williams said, sort of there's this period of initial review where you're going to be identifying purpose statements and potentially standards for evaluating the effectiveness of these. And upon completion of that sort of initial review period, that you then move on to the process of doing the sort of ongoing review with the more detailed components that Mr. Williams talked about.
Thank you, Mr. Williams. Representative Gomez, I think it'll be up to the chair and vice chair how they want to prioritize, if they want to do it simultaneously or not. So I think that's to be determined. Any other questions? I'm not seeing any. Do we want to stop sharing the slides? Thank you. Okay, members, so we have a lot to work on. This is a big task, so we're not going to be able to accomplish everything the first year, but I think we can start. The next item on the agenda is to elect a chair and vice chair. And the only rule is that the chair and vice chair have to be from different bodies. So Senator Rest.
Thank you, Madam Chair. I respect the work of Representative Gomez as being an author on the tax expenditure legislation 2019-2020, and I nominate her to be the first chair.
Okay, any other nominations? Not seeing any. This will be a voice vote. Members, all those in favor of electing Representative Gomez as chair of the Tax Expenditure Review Committee, please say aye.
Aye.
Aye. Any opposed? Okay, the motion prevails and Representative Gomez is now the chair. And I will nominate Senator Rest as vice chair. Are there any other nominations from vice chair from the Senate? Not seeing any. So nominations are closed. All those in favor of Senator Rest as vice chair, please say aye.
Aye.
Aye. Any opposed? Okay, motion prevails and Senator Rest is vice chair. So I think I will just finish out the agenda since Chair Gomez might not have it in front of her and then she can chair and gavel in the next meeting. Is that okay, Chair Gomez?
That sounds great. Thank you.
Okay.
Thanks, everyone.
Okay, wonderful. The next item is we have to decide the schedule and timing for our commission meetings through the end of session and through the rest of the year. So I think we can, I'm open to a conversation right now if members have preferences. We can continue working in a remote setting or we can do hybrid or in-person meetings. I think we should decide to meet fairly regularly after session and maybe meet a few more times during session. But Senator Rest?
I just want to make sure that we meet a minimum number of meetings, and I wonder where that is in the legislation.
Mr. Williams.
Chair Gomez and Senator Rest, I don't think that there's any minimum number of meetings in the enacting legislation that I saw. And Mr. Williams could correct me if I'm wrong about that detail, but there is one requirement that the commission hold a public hearing on the tax expenditures that are being reviewed in that year prior to December 1st, and then the report would be due December 15th. But I don't think there's any statutory requirement for a certain number of meetings.
So, Madam Chair, so the requirement actually is prior to December 1st, a public hearing, a meeting must be heard and cannot be set aside. Sometimes, commissions or whatever, they have a requirement for quarterly meetings, and I just wanted to make sure that's not what's here, and also that we can meet as frequently as is deemed expeditious. Thank you.
Okay, so think about the frequency and we can send out an email and collect information for the next meeting, which will be during session, depending on your session calendars. I know we're going to be on the floor quite a bit the next 2 weeks, so I'll have staff look for the next date during session, and then we can send out a doodle poll for after session. Senator Bach?
Well, I'm looking at the statute and in section 10, on the back of the page, subdivision 7 says by December 15th of each year, the commission must submit a written report to the legislative committees with jurisdiction of tax policy. The report must detail the results of the commission's review of tax expenditures in the previous year. So it seems like the first report, I don't know what the requirements are going to be because there wasn't any review in the previous year. So maybe someone's got an idea about what should be contained in the first report.
Thank you, Senator Bach. And I think this is a reference to the initial review, which would be our first report, but I'll have Mr. Williams or Mr. Wilms comment.
Oh,
Chair Schultz and Senator Bach, I think that it's not perfectly clear what that statute means necessarily by previous year. So I think that it would be sort of the commission's determination to figure out if they want to, if you all want to issue a report in December 15th for the year 2022 or not. But I think that Representative Schultz is right that there's sort of an initial period of review that's described in subdivision 4 under duties. It's paragraph A there that describes what the period of initial review would entail. And that would be the commission's work sort of initially.
Senator Bach.
That's helpful. That's helpful, I think. Yeah, I didn't read on further, but the first report will look different, the initial one, than subsequent ones for sure.
Yeah, I think we all agree on that. Language is not perfect. I agree with you, Senator Bach. Commissioner Doty.
Thank you, Chair Schultz. I was going to just make a suggestion that that maybe we consider like a monthly cadence of meetings potentially. You know, when you start looking at all the tax expenditures that are there, we have a lot to get through. And, you know, that initial review is going to take us a fair amount of time. I mean, I think as I recall, the initial review is going to focus on like a purpose statement for each of the tax expenditures. So it does feel like we have a lot of work to do. So I would just throw that out as something maybe as a possibility, like a monthly kind of a cadence of some sort.
I think that's a great idea, Commissioner Doty. We also need the staff to do a lot of work. And I know a lot of the staff are busy during session. So we just have to be mindful of what their responsibilities are. And I'm sure your staff are busy too, Commissioner Doty. So we will figure that offline when we can meet and when we can have staff start digging into the tax expenditures and help assist the members of this committee. Any other comments about regular meeting times? Okay, we will work on that. We talked a little bit about the report and the deadlines already. That was item number 5. Is there any input to the Legislative Budget Office staff on material that you would like to see for the next meeting? And I forgot to mention, but members, all of the members should have a binder at their office that was delivered today, I believe, with the information, the agenda, the statute, and then the 2022 State of Minnesota tax expenditure budget for 2022-2025 from the Department of Revenue. So that is in your binders. But is there other information that would be helpful for members for the next meeting to have? Well, if you think of anything, please reach out to the LBO staff and our new chair and vice chair for input on what you would like to see at the next meeting. Okay, so the homework assignment, I'll just assign a couple things. I would assign for you to review the tax expenditure budget from the Department of Revenue that's in your packets, just so you can start looking at the various tax expenditures. Start maybe prioritizing which ones you'd like to review. Maybe make a wish list of the top 10. And then think about, as you're looking at those tax expenditures, think about metrics, or if they don't have a purpose or intent statement, think about what that would be, and metrics to measure whether or not that tax expenditure is working as it was intended, and ways to review its effectiveness or its efficiency. That might help us get the work started immediately, and then we can come together and discuss various tax expenditures to review and think about the intent or the purpose of that tax expenditure as well. And we do have quite a few that we need to review, but remember, we don't have to do all of them this year. This is going to be an ongoing process. Okay, any other comments or feedback before we adjourn? Any questions from staff? I'm not seeing any. Okay, well, thank you, members, for your time. So we'll just check your emails for the next meeting and availability, and staff will try to put something on our calendars before session ends, and then something regularly after session ends on May 23rd. Okay, with that, members, it's great to see everybody. We are adjourned.